And the total value of commodities traded on the AFEX Commodities Exchange for the week of 23rd of February to the 1st of March went up by 50% to 3.6 billion naira. In 194 deals, the number of contracts also increased by 193,899, up 48%. For details here, let's talk to Michael Martins, now portfolio manager at AFEX. Hello, Martins. Great to have you.
Hi, Ladi. Good morning. Great to have you too.
Good morning. So take us through the trading activities in the week under review.
All right, thank you. So if you look at the week under review, the commodities market was sufficiently green, right? If you look at the total value of transactions executed on the exchange, it went up by 50% from 2.4 billion naira to 3.6 billion naira. The total number of contracts traded on the exchange also went up by 48% from around 130,000 contracts to more than 193,000 contracts for the week under review. The total number of deals did significant numbers, posting more than 128% from the previous week's 85 deal to close the week under review at around 194 deal. The ACI and the AEI also did positive numbers over the course of the week, posting 3.55% and 1.79% over the course of the week. And I must say that this is the second consecutive positive week for the AFEX Export Index. With regards to volume, we generally had a higher volume traded this week in comparison to the previous week, with maize, sorghum, and ginger being the major culprits in the week under review. With regards to price, the commodities market, like I said earlier, was sufficiently green. We saw the biggest numbers in commodities like maize, soybean, and ginger posting returns of 5.13%, 16.25%, and 4.56% over the course of the week. With regards to losers in the commodities market, we only saw that with regards to cocoa, which lost only a marginal 0.89% over the course of the week to close at 103,400 naira per contract. The only other asset under consideration is the fair trade exchange traded commodity, which also went up marginally over the course of the week, growing up by 0.83% to close at 14,306 naira per contract. So I believe that's by and large all of what happened in the commodities market in the week under review. All
right, Michael, you talked about all the indices, of course, being in the green in the past 2 weeks. So what factors would you attribute to that sentiment we saw there?
So if you look at the weighting of the indexes, so we have the ACI, which contains maize, soybean, paddy rice, and sorghum, and they're weighted 58%, 14%, 20%, and 8% respectively. And with the AEI, we also have weights of 62% for cocoa and 38% for ginger. And the reason why they're weighted thusly is because of, number one, and the number of demand that we have for these commodities on the exchange on a day-to-day basis and even on a weekly basis. And also, secondly, would also be to consider the volume of production for these commodities, which is one of the reasons why they're imputed into the index at the end of the day.
So does the CBN recent adjustment of the official exchange rate affect activities on the commodities market?
Not particularly. We see the recent CBN adjustment from 390 naira to $1 to 410 naira. To 410 naira to $1. We see it as them adjusting to the realities of the foreign exchange market. However, historical data would also suggest that there is a fair bit of correlation between the commodities market and the exchange rate, particularly the parallel market. However, since the adjustment by the central bank, we haven't seen any significant movement in the parallel market, and that would indicate, by and large, that the commodities market has already adjusted in terms of prices to reflect previous sentiments of inflation and then GDP numbers. On the other hand, the CBN adjustment could also be seen as an attempt by the central bank to promote export, but whether or not that eventually happens, time will tell.
All right. Now, we have seen the current trend in the food market where food commodities that are supposed to come to the south from the north are being blocked and the north there. So where can the commodities exchange play a role in all of this? Because a lot of those food commodities seem to be perishing on the way.
So if you look at what is currently going on in the market, like you earlier alluded to, Most of the issues that we're seeing right now, particularly concerns directly perishable goods. I believe that most people who are selling these products are having issues moving them to the south, like you said, are having to sell them at rock bottom prices. I mean, even rumors that we're hearing from the northern part of the state suggest like that a basket of tomato is going for around 700 or 800 naira. As regards commodities that are traded on the exchange, commodities that are traded on the exchange tends to have a longer shelf life, meaning that they can sort of wade through the idiosyncrasies of the crisis that we're currently having in the market. As regards what the exchange does is that when you trade on the exchange, you're essentially guaranteed quality and quantity regardless of where you're buying from, as opposed to you just buying from the open market. Because what the buyers and sellers are having to do now is they're having to make really core business decisions as regards whether or not they're going to hold this commodity and face quality decline over a period of time, or particularly just sell their commodities at whatever price they can get it in the market that is available to them. As regards how it has affected the activities of the exchange, I believe the only issue we're currently having right now is logistics and moving commodities from the north to the south. But we believe that the issue would be rectified before too long.
Okay. Now, but let me just ask this question. These perishable commodities, is there a way they can be traded on the commodities exchange, perhaps for companies that are, for instance, like tomatoes, for companies that can use it for tomato pastes?
I mean, a lot of that, we're currently investigating the possibility of doing that. I believe my colleague coming after me will also speak to another commodity that we're listing recently, which is cashew. But as regards how they particularly can be traded on the exchange, that's a very difficult question to answer. A lot of it, like I said, would have to depend on how well we can store these commodities over a long period of time, and whether or not we can start using certain chemicals to preserve their quality over a long period of time, so that we, at the end of the day, being the counterparty to most transactions, can sustainably guarantee their quality and quantity. But like I said earlier, that's a very difficult question to answer, particularly for perishable goods.
All right, thank you very much, Michael. Okay, let's have Hemense Oka, the Vice President Commercials at AFEX, join us now to talk about this new commodity that is being included in the AFEX Commodities Exchange, and that is cashew. Thank you very much, Hemense, for joining us on the program. And good morning.
Thank you very much for having me.
Okay, you currently added cashew to the products traded on your platform. What determines the inclusion of agro-commodities for trade on the exchange?
Yeah, so a lot goes into listing a commodity on the exchange. For us, we take about 2-3 years before we evaluate, make a lot of mistakes, and learn. But it comes down to supply and demand, comes down to AFEX's ability to have an impact, and finally, the future potential that we see in the commodity. Cashew is growing, right? We see strong demand continue to come out of India and Vietnam, followed closely by China for the commodity. The supply chain locally is quite robust. Majority of it comes from Kogi states, with also high quality coming out of Ogbomoso. And finally, we still think that AFEX warehouse infrastructure, as well as our technology, can play a role. And down the line, there's a lot of volatility that comes with trading cashew. We believe we can develop a futures product that can add to any stakeholder's risk mitigation strategy once they're playing in the space as well. So all these factors combine and let us know that this is the right time to go into cashew.
So one of the key benefits of the commodities exchange is to bring on board a price discovery. So let's talk a bit about the price data of cashew. How was the performance of cashew? How has it been in the past 3 years?
So it's definitely been challenging, right? Corona and the pandemic impact cannot be understated here. So we've seen huge price volatility in the market. Each year we've seen swings about 60% or so. But this does create an opportunity for trade as well. Currently, the international price for cashew is listing around $1,300. Nigeria will be trading at a discount of that too, so probably around the range of $1,100 or so.
So how can the market participants plug into this new commodity?
Correct. So, you know, given the current economy that we all live and operate in, there is this drive for earning hard currency. And so we see a lot of players come into the space wanting to participate.
Oh, okay. Now, for this cashew now, when are we supposed to see perhaps the pricing come on board?
So it's now. Our spot market trades and tracks the real season. So season starts end of February, goes till about May or so. So you can find, we'll be listing cashew shortly within the week or so to follow the trends in the market.
All right, thank you very much, Mr. Hemense Orka, Vice President Commercials, AFEX Commodities. We take a moment. We'll be back.